Hello guys, welcome to another episode of Weekend Wisdom. So guys, in this episode we are going to show you how to trade gold during this particular period influenced by the coronavirus. So guys, in order to take good trades into gold, which is a particular commodity, we must learn how to have a big picture of this particular chart. So guys, if you are an intraday trader, for example, you should have a nice perspective of the long-term time frames in order to take good trades into the lower time frames. So guys, I leave the video to Simon, which is gonna show you how to trade gold during this Weekend Wisdom.
Hi everyone, it's Simon speaking here. Welcome to the 8th episode of Weekend Wisdom. So as Luca previously said, I'm gonna break down gold for you, giving you some quick information, a quick breakdown, and also some tips and suggestions to trade this commodity, which in the last 2 years, as we know, has been performing such a long and steady bull run to the historical highs where we are now sitting at. As you can see, we are almost at $1,800 per ounce. And this could be a make or break moment. Why? Because we know that, for example, the price was consolidating in this area on the monthly time frame. I'm going to put you up the key levels just in a second, guys. So price was performing this consolidation, and since the US and China trade war, we've been trading higher and higher. Then we also had the coronavirus, which has influenced this commodity quite strongly. As we can see, since the coronavirus, where my cursor is at the moment, in these such a huge spinning top candle, which basically pierced down and then brought us back again. So from here, guys, let's break down gold into its structures. So as I just said, guys, the price was consolidating in and around 1350. Let's set this level straight up. Okay. There we go. And we had our support around 1150, sorry. As we can see from here. Something like this. So what has basically happened, guys, is that gold since then has broken out of this consolidation, never came back for a retest. Instead, we went straight up to the historical highs, which we can identify with 1800 over here. Let's make it clear. As we can see, we are just reaching now the historical highs. I'm setting prices now just for the fact that you should know that gold trades in ranges and in price levels. So yes, we usually look for ranges and areas of sensitivity into a chart, but in this case I want to highlight prices as well, so you can see the straight reaction that gold has from these prices. So on the monthly time frame, as I said just few seconds ago, price has been performing such a strong bull run, which we can break down in various parts in order to understand what has pushed gold so high back to the historical highs. So first of all, I would like to stress out that until this point, until the end of 2019, the market theme was related most of all about the US and China trade war, which has been waging into the market for a long time, and this has given some risk of sentiment to the commodity and the whole of the market, generating the first part of this bull run, which we can identify as the breakout from 1350. So since this moment, price has never come back down to retest. Instead, it drove itself higher and higher by time passing. So from here, I would like to break it down from here, because as you can see from this big ass candle, we can clearly understand that liquidity has got out from the market and back into the market again. That's why we generated the high of this candle first. Prices plummeted, reaching again these minus support, and then it drove higher. So being on the monthly time frame, my best suggestion is to highlight this area from this point to the support. So this block of candles, this has been a monthly consolidation, which we can clearly see if we go into the weekly time frame. As we can see, price has been consolidating for a while into this little range box for the end of 2019. For the rest of 2019, it has been consolidating in this area, rejecting the highs and coming back to support around 1450. So from here, guys, we set support. We've broken out of this consolidation box. It almost seemed that we were not retesting at all this structure, whereas as soon as the pandemic has got into Europe and started affecting the whole of the world, basically price has come violently back down to retest the broken structure. So this is something that gold does most of the time. It almost seems that it's not gonna come back for a retest, and all of a sudden it comes back straight away to support or to resistance to retest the broken structure, and then it carries on with the overall direction. So in this case, as you can see, we had such a nice breakout. Price has started to drift higher, and then we started generating a block of candles, which means that maybe institutions are starting to take out their money. And we can clearly understand it from the fact that we reached the highs around 1690, we pierced 1700s, and then we slammed back to the downside, coming back to retest 1450. So from there, actually things has got worse. Why? Because institution has taken out their money, and then they pushed it back in even more into their commodity because of the coronavirus pandemic. So the risk off sentiment has been going on into the market since the start of the pandemic, and is getting worse and worse as we go along. Why this is happening though? We had some hopes about reopening. We are reopening now. Small shops, big companies as well. Everything seems to get back to a reality by far. But the only problem is that the market is still pricing in a second wave of COVID-19. And this might be impactful for the commodity, as it might burst through 1800s without even coming back for a retest of the bigger structure, or this consolidation, I mean. So from here, guys, as you can see, price has come back to retest, and from here we generated the second impulsive move. So first impulsive move, come back, the retracement has been completed now, and then we can drive higher. So guys, from here we need to understand a few things. So gold is quite violent in price movements, but why this is happening? The flows of money getting into gold are big amounts of money. So whenever we see a violent spike in gold, we also need to remember that it's not that liquid as it seems as a market. It is a single commodity, and we know that gold asks for perfection. So whenever you want to trade gold, just wait for the candles to close, otherwise you might get caught in movements like these. You might think price is not going to retest, price is not going to come back. Trust me, in gold, price will come back. Respect the structure, respect prices, and carry on with the overall direction. Now guys, I want to focus on the price action with you, so you can see clearly what is up next for gold, what is gonna happen in the weeks ahead, what might happen as well if price touches a level rather than another one. So from now we need to look at the fact that gold in the most recent weeks has been consolidating into this tiny range, which we can see over here, guys. Okay, so we can see that the top was set around here in this area for 1747. Let's see, we can pull this box across and we can see clearly that price was consolidating in this box. So let's now delve deeper into lower time frames in order to find further information of what the price can do in the oncoming weeks. So as we know, whenever a consolidation gets broken, we are forced to pull back to retest, get some more liquidity in order to continue to the upside in this case. As we can see, we had such a massive week to the downside, which then generated a bullish hammer, and from here the structure seems is going up again, maybe reaching 1800s in the oncoming weeks. So for now, I'm still bullish on gold. Why? Because of the fact that there are many risky factors involved now at the moment. We have the pandemic, we have still some rioting, we also have the worries of a second wave of COVID-19, which might be impactful for this commodity. So in this case, guys, what we need to look at is the structure correlated to the fundamentals and risky themes that we get information of. In this case, for example, what I'm looking at is the fact that the second wave of COVID might be the most impactful event that can influence the overall direction of gold, making it possible for gold to reach and maybe go even beyond the 1800 mark. So in this case, guys, what do we need to look at? From the daily perspective, we can see that we are in a make or break position now. So we either go up or we come back for another retest, which not taking much into account for the only factor that from the big wicks that we have here and here, we can understand already that liquidity has got into the market and might push the price higher already. Why? First retests, big candle with a big wick, it has become a bullish hammer which is going towards the high, and indeed it smashed the highs and then came back to grab some more liquidity. 1, 2. So we can analyze these two spikes straight away by going over here. As we can see, we came back straight into 1760. Awesome round number. Also, we have respected the structure. We can see we had this nice support, which we can clearly highlight over here. We respected this support, and then price, even though it was generating these big wicks, which are made especially to cut off people from longs over here. So they've been cut off and then price drove higher. In this case, for example, in the intensive group, we managed to understand what was about to happen over here. So we decided to grab an intraday position, a short position, because we knew that price had to retest the box. So in this case, what do we need to look at? For now, we can clearly see as well that we have generated a big bullish candle, which has already confirmed the support, and now price instead is basically sideways over here between 1775-ish, 77-ish, and 1773, more or less. So in this case, I would say, I would even take this into account, looking at how price is going to react from here. In this case, I would say, if we manage to break higher, we might just go straight to 1800s. Whereas instead, if we break lower, we need to be careful of 1760, and if price doesn't sustain this level, we might just go back into 1750 downside. So guys, For now, I hope everything was pretty crystal clear. As you can see, the only thing you need to do in order to analyze the market and price in a thorough manner, you just need to have a clear idea of what price has done, what price is doing, and what price might do, basing everything on some parameters that you need to set, guys. So in this case, check the structure, check what price is doing, how it is reacting from levels, the levels that you are highlighting in this case. And guys, thank you so much for watching this video. It means a lot for us when you support us and you support our work. So guys, don't forget to subscribe, activate the notification bell for whenever we upload a new video. And guys, thank you so much for watching again.